Hello, everyone. My name is Matthew Frailey. I'm the founder of BreakpointTrades.com. We've been bringing you advanced technical analysis, market commentary, trade ideas, and mechanical trading systems, and we've been doing that since 2003. And as far as our YouTube channel, if you haven't done so, subscribe, like, comment. And as far as our service, BreakpointTrades.com, consider trying us out, or at the very least, sign up to our free newsletter. It's completely free. I'll put a link in the video description of the video. Okay, so let's go and get started with this newsletter. Today's Monday, October 18th, 2021. And again, this is a technical analysis on the general market as well as trade ideas. So if you take a look at the table of contents, this newsletter is divided into 5 major sections. This is the format we generally follow. We'll first look at the major indexes, starting with the S&P, then we'll look at the other indexes. We'll move on to some market indicators, as well as bonds. We'll look at a few major market sectors. We'll look at the dollar. We'll look at various commodities. We'll look at various precious metals, GDX, some individual names there, and we'll follow up with trade ideas. In this section, the vast majority there will be trade ideas of ours over the last couple of weeks that have triggered. We've had some amazing setups. Hopefully you guys are catching some of these. And I did add a few new setups tonight. But as far as the market, we're quite overbought here. So I was hesitant to add too many long setups. And I did add a short setup, which is Disney. Okay, but I did add a few long setups. And again, as far as the market, today we saw a little bifurcation. The S&P and NASDAQ followed through on last week's gains, but they are a bit overbought in the short term, while the Dow and Russell 2000 small caps were down. So again, we saw a little bifurcation. Clearly what led today with the large cap, and especially the large cap tech stocks, such as in the NASDAQ 100, the so-called FANG stocks as well. So that's what's led. Also, again, very short-term, market's a bit stretched here. The VIX today did close slightly up. Usually that's quite rare for the VIX and the S&P to close up. So sometimes when that occurs, the next day is a down day. So we'll see if that occurs on Wednesday. As far as the other viable options that I listed on the market late last week, they are still all viable. And we'll talk about that below. So let's get started. Item number 2 below shows the index sector table, what transpired today. So you can see as far as the major indexes here, little bifurcation, some weakness in the Dow and small caps. Again, they weren't down very much, but a little bit of weakness. And S&P up 0.34%, NASDAQ and NASDAQ 100 especially, nice gains. Again, big cap tech, especially FANG, led today. And as far as the market breadth today, we also saw it there with breadth fairly strong in the tech area, but fairly lackluster in the other areas. Now, as far as the major market sectors, we follow 21 of them here. So a nice broad overview. Most of the sectors were up today. No real big gains, though. Down or weakness in the utilities, drugs, healthcare, and biotech especially. Currencies, US dollar up just a tad, 0.04%. Crypto's down slightly. The stocks had a great day, such as Mara, GBTC, Riot, Kathy Woods, ARC, you name it. But they are quite overbought. Those could get a little pullback here, so be mindful of that. Commodities, mostly to the downside today. Only a couple commodities up, and that were the corn and wheat. But all the other commodities were down, especially natural gas, down 7.8%. It lost its 20-day moving average today. I think it's on a date to tag its 50-day moving average. And I think that'll actually be a buying opportunity, which I'll show you when we get to those charts in the commodities section. Precious metals were also down slightly, even the stocks. But I was expecting this in the stocks, GDX. What I'm going to be watching for here is to see if this sector can form a higher low right shoulder of a possible inverse head and shoulder pattern. Okay. Bonds, high corporate down a tad, TLT 20-year bonds up. Next, item number 3 shows the economic news calendar for this week. But again, clearly the market is really going to be focused on earnings, because we're in earnings season, guys. And let's go and jump to the index charts, starting with the S&P. So the first chart below, item number 4, is the daily chart of the S&P. And again, if you happen to be new to our YouTube channel, why do I reference the numbers? So on our forum newsletters, we have a large number near each chart that we reference so that folks don't get lost. But on the YouTube videos, those don't matter. But that's why you hear me comment about the numbers. But anyway, here's the daily S&P. So as you know, we lost that 50-day moving average back in September, which we expected. We had sort of a zigzag pullback. The bullish view is you completed some sort of ABC correction, and we're going to go to new highs. All right. Today we closed over the 50-day moving average last week, and today we closed right at another resistance area. The MACD indicator, when that's above 0, you're uptrending. It had fallen below 0 here. It's now testing the underside of 0. We'll see what happens tomorrow. Next. Chart number 5. Here's another daily chart of the S&P. This one contains our trusty moving average ribbon. It's a pretty good guide. These moving average ribbons, if you haven't done so, are a good thing to add to your charts. You know, they're a good trend guide, and whenever they pinch, those give you good trade opportunities. And when they get too wide, you do for some sort of correction. But, you know, the moving average ribbons went negative back here in September. They had a little pinch right here, which ended up being a good short opportunity right here, lower high, back in mid-September. And they've now crossed slightly to the upside. Next. So let's move to these various options that I discussed last week, and they're all still viable, guys, despite the fact that the S&P's come way back up to here. So this is the super bullish view where you completed a simple zigzag, you know, possible fourth wave. And we're going to go right to new highs. Okay, so that's one scenario. Next. Chart number 7, here's the other scenario I showed last week on Wednesday, where the market could rally up and form this coil pattern that would just chop the hell out of everyone, where, you know, you get up high enough that everyone gets super bullish, there's no more shorts, then they pull the rug, come down, you form a higher low, but it retraces a lot of this initial move. Gets people super bearish, then it reverses. Here, people think, okay, I'm going to finally break out, and it comes down again. You know, meanwhile, you're just getting chopped the hell. So this pattern is still very viable. Next. Chart number 8. Here's basically the same chart, the same coil. I call it the frustration pattern. So this is the proper way to label it, A, B, C, D, E pattern. Proper coils have 5 waves. So B, you'd work on a pullback at C, then a D, then an E. Wave E's often form a lower high in the channel. If they're bullish, then break out. So that's, again, same thing as the pattern I showed above. I just drew this one to illustrate this. Next. Chart number 9. Here's the S&P, and it's cut off from the top. But this is the S&P from last year, 2020. This is that fall time frame. And, you know, folks are saying, hey, we've already retraced so much on the market. You know, that means it's 100% certain we're just going to go right back to new highs. No, it's not, guys. And that's what makes the markets tricky. While odds could favor that, you know, here's back in fall 2020. The market had an initial ABC zigzag correction. It rallied up, formed a lower high, but look how far this retraced. Far beyond any 61.8% fib retracement, etc. Nearly back to the highs. Right. You know, and then it came all the way down here. Didn't take that recent low out there, but got pretty close. Then finally it was off to the races. But that's why I stated, guys, market could still do anything it wants to here. So that's why I like to just continue to illustrate this. All right, let's move on. Move to the intraday charts. Chart number 10, here's the 2-hour chart. So last Wednesday I showed this inverse head and shoulder pattern, or diamond, really. I call it more of a diamond because you have a pretty strongly sloping neckline here. So for an inverse head and shoulder pattern, I prefer more of a flat neckline. But regardless, you had a higher low, and I thought the market would push up, and this has worked out nicely since my newsletter last Wednesday. We took out the downtrend line. You had the 61.8% fib retracement here. Again, that's from the September highs to the October lows. We took that out last Friday and then followed through today. We're now at some resistance here. So the inverse head and shoulder pattern's playing out for now, but a little resistance right here in the short term. Again, quite overbought here in the very short term. So a little pullback here at the very least, even under a bullish view where you just go to the new highs would probably make sense. All right. Or again, you know, if we get that triangle pattern where, you know, you work all the way down, you know, like this. Okay. Next. Let's clear that out. Chart 11, here's the 2-hour view of the S&P, shows that inverse head and shoulder pattern possibility. By the way, today we pulled back, and that pullback basically found, one positive is we found support near that 61.8% fib. I meant to show that on the S&P above, but you can kind of see it here on the SPY. Next. Chart 12, here's the 60-minute view of the S&P, this channel we were shown for the last couple of weeks. We had a nice tight coil here. Broke out, stalled at this initial downtrend line, had an ABC zigzag pullback, found support right around the 61.8% fib retracement of this move. I removed the fibs here just because the chart was being messy. Rallied up, we took out the downtrend line, we took out the 61 fib, which is kind of getting cut off the chart here, and pushed a little bit. Short term, again, ribbons quite stretched, RSIs overbought. Little divergence showing up. So a little pullback in here would make some sense. Next. Chart 13, here's a 30-minute view, and I like this chart. It's the same chart as the one above, but shows you a little more detail. Again, you can see we got some resistance right up in here, right around the 44.90-ish area. We also have now a couple open gaps here. And again, the market likes to fill these open gaps, guys, remember? So, you know, we had an open gap back here, which was filled up in here. We had an open gap there that was filled. And so we do have a couple of open gaps here. It would be fine to fill this open gap. That could be a target on a pullback. Now, if you start to fill this open gap, then you'd be looking at minimum at the coil scenario, or even another bearish scenario where you come all the way down to the lows or back to these lows. The one thing, I'm not going to get too into it, but the Elliott wavers out there, it's very difficult to count 5 waves here yet. If you count from this low, you can count 1, 2, 3. I cannot count 5 waves here. I mean, it looks like 3 waves to me. 1, 2, 3. So, you know, it's kind of hard to count 5 here as well. A little easier than it is here, but so that's what some of the bears have going for them. It's, you still haven't confirmed a 5 wave. You still have more of a zigzag at this point. Next, to illustrate this, here's another 30-minute chart, and just showing a simple zigzag. This move up here is essentially met this move, so we have a symmetry move, and this, because of that, that's why this also could be a logical pullback area. And note, guys, little MACD divergence here. Next, chart 15. Here's a 15-minute view of the S&P. You can note the open gap. Next, moving on to the KISS charts. Here's the S&P KISS chart. No new DVTs here. Last week we got that second DVT, and I made a post in the trading community blog regarding this. So, next. Chart 17, here's the various cycle time frames. So the one thing to note here, looks like we did close slightly over this ATR, which is a positive on the daily. Obviously, we're above the ATRs on all the other time frames. We are a bit stretched here on all these time frames. These moving average ribbons with the BPTMA, you can see how these are a good guide. Whenever the BPTMA is too stretched from the ribbons, you get, you know, your snapbacks, like right here. Too stretched, you know, and back here in the short term, look how wide this moving average ribbon is, or the BPTMA is with the ribbon. And you have a 13 to mark here on the 2-hour chart. So that stands out to me as quite extended. So to me, it makes sense to perhaps have a pullback, at least on Tuesday. Otherwise, you can see we did have a nice rally off this cycle support. We got a cycle resistance, cycle support. Price has been following this pretty well on the 2-hour. The cycle resistance there. Next. Moving on to the triple Qs. They led today with the large cap. They also closed right into this resistance area. All right. Next. Chart number 19, here's the 60-minute chart, the channel. As you know, we gapped out of this channel last week, and we're now firmly above that 61.8% fib area. Going back to my educational comments last week, guys, here's how the market tends to trade. Whenever if you have a well-defined channel, downtrend line, something like this, and let's say you're in this area. Oops, it's way too thick. All right, let's say you're around in here, and you're like, I think it's going to break out. I'm going to buy once price breaks over the downtrend line. I'm telling you from experience, the market will most of the time not just go over this trend line intraday like this. It'll gap over it, just gap and go. Now you could buy the gap, but from my experience, if you have a pretty good inclination that it's going to break out, buy inside the pattern, because many times it'll gap out like a power gap. Okay. Otherwise, again, short term, bit stretched. Look at the RSI indicators. Next. Chart number 20, here's another 2-hour chart with the ribbons this time. Again, as an education, those ribbons, they get too stretched. You're due for a move in the other direction, reversion to mean at least. A little stretched in the short term. Next. Chart number 21, here's the 16-minute chart, or 15-minute chart. Nice move through this resistance area. Last week, of course, we had a perfect ABC pullback into the 61.8 fib here where he found support. Next. Chart number 22, here's the FANG index. Contains a lot of those large cap FANG type stocks. Apple, Netflix, Microsoft, Google. And you can see it's almost back to the high. So that would be a bullish, this would be a bullish indicator for the market. Had a perfect, simple ABC zigzag. Next. Chart number 23, here's the daily KISS chart for the Qs. Again, just like the S&P, they went back long, a couple weeks ago, right here. You got a couple DVTs, nothing new today, even with the move up. Next. Chart number 24, here's the various cycle time frames. Again, similar comments could be made as I just made on the S&P charts. A little overbought in the short term. Next. Chart number 25, here's the Russell small caps along with the Dow. They lagged today. Here I redrew this larger coil. I adjusted it to tag today's area. So you still have this coil. You had a coil within a coil which broke out. So the bulls want to hold this coil. We'll see if that can happen. If they can hold the coil here at these moving averages. So that does it on the indexes, guys. Tonight, futures are down just a few points. No big move on futures. Let's move on. Chart number 26, here's the VIX. So it did eke up a slight gain. Again, it wasn't up much. You got a black candle here. It found support at the lower Bollinger Bands on Friday, but little black candle today. But it did technically close up with the S&P closing up, which is kind of rare. So take notice of that. It would not shock me to see a little bounce in the VIX here, at the very least. Maybe then come down again. Next. Chart number 27, J&K High Yield Corporate. Down just a tad, no changes in the overall pattern. The moving average ribbon here is still bearishly pinched for now. Be aware of that. Next. Chart number 28, TLT, up today. Otherwise, nice rally from the lows last week. Next. Chart number 29, this shows you the major sectors today. Again, I'm not going to go over these all individually, so let's just take a look at a few select ones. Here's energy. It was up more this morning, gave some of that back. A couple black candles here now, so we are quite stretched. This may be due for a pullback. Clearly that inverse head and shoulder pattern that I showed a few weeks back played out, basically a month ago, but a little stretched here with the black candles. Next. Chart 31. I had the wrong chart, crude oil, so I had to move that down. Pause the video. So here's XLE, consumer discretionary, had a big rally today. One of the stronger sectors. Broke out on Friday. Nice follow through today. Next. Chart 32, semiconductors. So far, they've had a decent rally off their 200-day moving average. Now into the 50-day moving average ribbon, pinching on the underside. Next. Moving to commodities, crude oil was up today initially, gave that back. We do have some RSI divergence building, so quite overbought here. A lot of the commodities are. Maybe we get a pullback finally. Next. Chart 34, copper, which was in this beautiful technical coil pattern, busted out last week. Little doji today. Again, eventually I think it's eventually going to take this area out, but maybe you get a little pullback and then breakout, something like that. Next. Chart 35, CPER, one of the copper ETFs, a way to play it, as well as some individual copper stocks. Gave back a little bit today as well, but nice move from this trendline break. Next. Chart 36, natural gas ETF, UNG. So got quite overbought back here. We've been monitoring this potential A, B, C zigzag pullback. The 50-day moving average here, guys, I think is a magnet. We haven't tested this for a while, so this may be a bounce point, something to watch maybe as early as tomorrow. Next. Chart 37, uranium ETF. As you know, I've been super bullish on uranium all year. We had a nice buy opportunity back here in August. I pointed out, nice rally up. And then another ABC buying opportunity in here in September. Another move up. Quite off the highs today, though. Next. As far as individual uranium stocks, DNN, cup and handle. This broke out today. Back tested the handle, became support. Still looks good. Next. Chart 39. Some of these other uranium stocks were very stretched. Like LEU was a long idea from last Thursday. Had a huge rally today up to 58, gave it all back. So a lot of them got quite stretched. So if you came into today owning some of these uranium stocks, hopefully you took some profits this morning when they were very overbought. Moving on. Chart 40, Bitcoin. Slight gain today. Note on Bitcoin, we do have a symmetry move. So the move up from here to here, you add it from this low, wave C, you're essentially meeting that. That doesn't mean it ends the move here, but we are meeting at least a ABC type symmetry. We're also not very far from these highs back in April when we had this kind of head and shoulder top. So this area here, could be an obvious magnet just because it's so dang close at this point. So I wouldn't be short really Bitcoin. I think it's going to at least tag those highs. Next. Chart 41, Ethereum, pulling back a little bit as well. Next. Looking at the various Bitcoin stocks, here's GBTC. It was up today initially, giving some back. Again, it's had a heck of a move from when we posted it as a long idea in this falling wedge pattern. So at minimum, you should have taken some profits by now. Next. Chart 43, Mara, probably my favorite one out of all of them. Another nice move today, but off the highs. Heck of a move from this entry back down here. And yet another opportunity here on this bull flag break. Next. Chart 44, Hut, another one that did well, but it was up to today to 13. Gave that back. So again, if you bought this last week in this breakout, you had a great trade and hopefully took some profits today as it gave some back. Next. Chart 45, Riot, one that's been lagging but trying to pop here a little bit. Buying's been coming into it. Tagged its 50-day here. Next. Chart 46, Coinbase. This has been a heck of a move. So while the others gave some of their gains back today, this one closed not too far off the highs. Very good gain there. Moving on. Chart 47, US dollar ETF. Basically just pretty much a flat day. No changes in the overall pattern. Next. Charter 48 gold. As you know, gold stalled right at this well-defined downtrend line last week. Little pullback today. You know, for now, you've only had a zigzag ABC move up. So could it come all the way down? It could. But the stocks did outperform on that move. So that's your positive. So I'm going to be watching the stocks because they lead. Next. Charter 49. Here's the weekly view of gold. So again, back here is when you had your multi-year rounded base, cup handle, or rounded bowl pattern. Right now, we have a long downtrend line here. That's your main resistance. You got to clear that for the bulls. This is your main support. That's simple. Next. Charter 50, silver. Slightly broke out of the channel last week. We'll see if it can hold this broken trend line or not. Next. Charter 50, GDX daily. So the stocks lead, as I state. This is the composite for the stocks. You know, you can see it on the ratio here. Now, what we have here, potentially, we broke through this downtrend line. You have a potential left shoulder and head. So, if this soon pulls back, if it can form a right shoulder, it could possibly form an inverse head and shoulder pattern. So that's why I'll be monitoring these stocks on a pullback, guys. Next. Charter 52, HMY. This is one I was super bullish on back in September. You just had a beautiful textbook. Falling wedge, 5-wave. Again, hope you took profits. This will be one to watch to buy on a pullback. Next. Charter 53, IAG. This one was up today, so it's been outperforming. Again, this is a long idea back in September when it was down here in the low 2s. So maybe get a light volume pullback here, but the chart looks good. You can see how it's been outperforming here in the ratio. Next. Charter 54, BTG, another gold stock. What I want to see is on a pullback. If it holds this trend line, that would be a good buying opportunity. All right, let's move to trade ideas, other trade ideas. So Facebook or FaceCrook, nice rally today along with the big cap tech near its 20-day moving average. We gave this as a long idea last week as a long setup off its 200-day moving average. So it was a pretty simple setup. So far, it's giving you trade. Next. Charter 56, BABA was a beautiful setup on this falling wedge. Just a perfect wedge with this MACD divergence. Right now, you got a potential flag set up. We'll see if we can get another pop out of that or not. But again, our original entry was down here. Next. Charter 57, AMD, one of my favorite semiconductor stocks. It is my favorite semiconductor. Had a textbook wedge. Remember, this was the setup I listed last week. And so if you bought it last week, it's had a nice rally up since. Next. Charter 58, Costco. We showed last week as a tight coil. On Friday, had a little black candle out of the coil, but, you know, if you held it, nice day today. Volume coming in, MACD trying to curl up. Moving average ribbon pinching. Next. Charter 59, NVIDIA, also coiled pattern from last week, trying to break out. Next. Charter 60, CEX. Nice flag pattern that busted out today. Long idea from the weekend. Next. Charter 61, Task. Another idea from last week that broke out and followed through yet again today. Next. Charter 62, BTU. Look at that move. This is a coal stock. Long setup from last week. Big power move. I missed this one, unfortunately. But this could still go higher. You got a little breakout area right here. Next. Charter 63, AMC. This was a long setup of ours as well. Breaking this little trend line. Reddit community stock. Next. Charter 64, Blue. I showed this as an inverse head and shoulder pattern over a week ago. Obviously, that has played out outstandingly. Next. Charter 65, Rocket Lab. We had as a short. It triggered last week and is moving down despite the market going up. Next. Charter 66, CGNT. Short idea from the weekend. Breaking a little trend line. Steve mentioned to me to, if you're short this, monitor this. You might want to put a tight stop on it, maybe today's highs. Next. Charter 67, Home Depot. I showed as a ascending triangle last week has busted out nicely. Next, Charber 68 lows, same deal. All right, now let's move to some new setups, guys. So, Charber 69, next. Coil pattern, you're starting to break it. Volume's expanding, but you got a resistance right here at the 510 area. You could still buy it. Next, Charber 70, TMC, nice little basing pattern. It's obviously been pretty wild here. I haven't looked at the news. Something went on. But anyway, you got a clean resistance here at 4 for a quick trade. You know, at least stay to the 20-day moving average. Next, Charber 71. Here's the 60-minute chart. This is the pattern. This is the time frame I like. You can see your resistance here. Notice your moving average ribbons are starting to come together. Your ribbons pinching. MACD's all pinched up. Next, Charber 72, DHT, kind of a cup and handle look, resistance at 680. Next, Charber 73, RVMD, coiled setup, tried to break down. It's still a viable setup either way. Next, Charber 74, Netflix, coil flag pattern. See if it can bust out of there. Next, Charber 75, Disney. Came down today. There was some negative news, but this is a weak support. If it loses this, we could see this break hard to the downside. This is a short idea. Next, Charber 76, zooming out on Disney. You could see not a lot of support. If it breaks this, it could fall down and fill this open gap perhaps. Next, Charber 77, Twillo, or Take Two Industries, I'm sorry, bull flag pattern. Next, Charber 78, Team, simple breakout idea. So there you go, guys. We'll see what happens tomorrow, and see you guys on Tuesday. Take care.